Hello, everyone. Hope you're having a good night. I think if you're a Cleveland Bengals fan, you probably are. I mean, I'm sorry, a Cincinnati Bengals fan. I should know that because my grandfather is from Ohio. Anyway, my name is Mark. I was a institutional trader. I was the head of trading at three different money managers. I traded directly for Mary Gabelli. I traded directly for Steve Cohen. I was a market maker. I oversaw the trading of a bunch of different hedge funds. So when it comes to trading, I know what's going on. Now, I decided one day, what am I going to do to give back after I quote unquote retired a few years ago? And what I decided was like, gee, what could be better than to teach people how to trade and help them make money so they can give back and do good things? Now, I'm not here to give a trading recommendation, but I just want to give a little bit of a trading lesson. So make sure you check out our site, stockmarketjobber.com. And if you're looking at this on YouTube, please subscribe and we'll let you know what's going on. All right. Yeah, blah, blah, blah. Enough is enough. Let's just take a look at Marathon Digital Holdings. This has been a very popular stock over the last few days. Now, I want to talk about what a Bollinger Band is, okay? This upper red line here is what we call a Bollinger Band. And the reason why is because there's a guy named John Bollinger who's a famous technician who I don't know if he's the first person to ever come up with it, but he's got credit for it. But regardless, who cares? We can use this to make money. Now, this red band here, this red line, is 2 standard deviations above the 20-day moving average. Why is that important? Well, it's important because according to statistics, 95% of all trading should be within 2 standard deviations of the mean. All right. So if something exceeds this threshold, it's going to get the attention of sellers, of the the computerized algorithms that are based on statistics. Now check it out. If we get above this, there's a good chance there's a reversion to the mean. Now a lot of investment strategies are on Wall Street are based on reversion to the mean. So check it out. We got above it, we reversed. Got above it, reversed. Got above it, reversed. Guess what now? We got above it and we could be reversing. Now, there's also a Bollinger Band on the bottom. I don't have it shown here because I just want to talk about overbought. But just remember that, everyone, right? Actually, not most, every market, stock, crypto, option, whatever you want to call it, trades in their typical or historical range most of the time. If it gets above that, we call that overbought. Why is that important? It attracts sellers into the market, and their selling could push the price down. So once again, to review, got above it, went down a little. I mean, this wasn't a huge move, but it told us the rally was over. This was a tradable move. This was a big move. This was a big move. And now, I don't know, we could be setting up for another big move lower. So make sure you check back here with stockmarketjobber.com. We're trying to build a community. Once again, my name is Mark. I have a lot of experience trading in the real world. I'm not just some poser who's like, oh, I was a hedge fund trader, blah, blah, blah. All right, whatever. That's it. I'm going to go back to watching football. Thank you, everybody. I will see you soon, hopefully.